Welcome back. The airline industry has been experiencing increasing demand, and it doesn't look like things are going to slow down anytime soon. According to the International Air Transport Association, the sector is expected to deliver net profit of $25.7 billion in 2024, which reflects a growth of 3.8%. I caught up with Lufthansa's newly appointed Senior Director for Sales in Nigeria, Equatorial Guinea, Southern and East Africa, Rene Koinzack, for a look at how the group has benefited from the uptick post the initial COVID hit in 2020. Here's what he had to say.
COVID-19 was for the airline industry globally, of course, a big shock and big influence. What we saw for Africa and especially also for South Africa, we came very strongly out of COVID.
Yeah.
We came very quickly out. We started already as Lufthansa Group October 2020 to restart our operations, which had been much earlier than in other parts of the world. What we also see, what we are on pre-COVID levels, so we are with our operations, with our production back what we had been before. We even having more flights to Africa or to the southern part of Africa. We added new destinations after COVID because there was maybe also a shift of attention to Africa because people saw, okay, we have opportunities. We added Namibia, we added Mauritius to our network. We had adjustments in South Africa with more flights, so it's year-round operations. So in particular, COVID had a big impact.
Yeah.
But I would even say for South Africa or Southern Africa, even a positive one as we added flights.
Yeah, I mean, it had a really big impact, particularly when you look at leisure and business travel. Because for leisure, it was a case of, because people were locked down for so long, there was this pent-up demand, and we can still see that now. But what about business travel? Because now we're working in a hybrid environment and also in a high-cost, high inflation environment where companies are trying to save money. So how have those two fared?
No, it's very true. I mean, first of all, leisure got a real boom since COVID. This is leisure, visiting families and friends, and people recognize we would like to get out, we would like to explore new things, treat themselves well, visiting their families, visiting their friends. Where we are far above what we ever saw in industries on levels, which is, of course, compensating a little bit also the decline in business travel. This is, again, with work from home, with work with Teams, with Zoom, all the ways of collaborations what we didn't have 3-4 years ago, or we had but haven't used. So there is a shift on business travel, which you mainly see in Europe, where short-term trips getting less and less. So one-day trips usually people are not taking anymore. But when we talk about Africa, people still, if you would like to do business, if you would like to meet business partners, there is still a certain demand of business travel, where we are not yet on pre-COVID levels yet. So this is that's also very clear, and it will change. The whole travel pattern changed. And things are changing. We're having vacations where people go for work and holidays.
Yeah.
Is it now a business trip? Is this a leisure trip?
Because people can work from anywhere.
Yeah.
Yeah. We'll talk about collaboration. There's a code-share agreement that you've reached with SAA. What exactly does that entail, and how does the value then filter through to the business?
Yes, we have a code-share agreement with SAA, and we have Airlink since this summer, which gives our passengers more options, more choice, more destinations in South Africa to connect via Johannesburg and Cape Town, which is more choice, more opportunities.
Well, I mean, you're also working in an environment, a continent where, the economic landscape has shifted in terms of high inflation, elevated interest rates. How is the competitive landscape at this point looking like when you have consumers that are constrained, that want the different airlines, different competitors to race to the bottom in terms of pricing. How are you navigating that?
I mean, of course, we're living in this environment and we are competing. For us, our value proposition is not only the price. We are really looking what we can do via network with our people, with our many different selling factors where we giving our customers a choice, and we have different brands. We have Lufthansa, Swiss, Edelweiss. We have different compartments, and I think that's our strongest point. We give many possibilities to choose from.
Yeah. And of course, it also has to do with your own efficiencies, operational efficiencies, trying to keep your input costs down. And of course, a big contributor to that is fuel. And I actually now want to move on because at the moment, COP28 is taking place, and there's a sustainability drive where you're trying to reach your climate change targets, and a big part of that is fuel, the replacement of fossil fuels with greener fuel sources. And how are you looking in terms of that, your targets, and also talk to me about the cost as well, because then that is seen as expensive, but also how does that translate to the consumer? Is it a case of you have to shoulder the costs now for value later?
I think it's a mix of many initiatives. So we want till 2030 reduce our carbon footprint by 50%, and these are many things. This is work with sustainable aviation fuel is one big part of this. The other part is having more fuel-efficient aircrafts. So we're getting the next year's 200 new aircrafts replacing the old ones, which is a big driver of fuel efficiency. Then is intermodality, when we talk in Europe, where you not fly anymore from Frankfurt to Berlin, but taking the train, or where we're getting more and more offers for our customers when we talk on the European continent, but also just started a collaboration in Korea with a train provider. When it's reducing plastic weight, etc. on board, this is many things. What leads to this carbon reduction? What we are having is and sustainable aviation fuel is one important pillar, but not the only one which will help us to reach it. So, and we have to do all the different ways. We focus just on one, it will not work.
Yeah. All right. So, well, of course, just to wrap up the conversation, what does your runway for growth look like in Africa? You've been in South Africa since 1962, if I'm not mistaken. So just for the continent, what does your growth runway look like at this point?
We have a clear commitment to growth. So we will grow next year in Southern and Eastern Africa. We introduce, as of next summer, Munich, Johannesburg new. We will have Nairobi, Brussels, with Brussels Airlines new, increasing to Kigali, our flights to daily operations, and so on. There's a clear roadmap where we're looking, where we have opportunities when we get new aircrafts in, so what we hopefully can sustainable growth further. So from all the different points, let it be classical business destinations like Johannesburg or Nairobi or Lagos, or let it be more leisure-focused destinations like Namibia or Mauritius.
One last question. With the challenges that we are experiencing in South Africa, when you talk about opportunities and the growth runway, how is your air freight offering looking like right now, particularly demand? Because we have seen a lot of companies struggling with the delays that are caused by the bottlenecks in our ports due to Transnet inefficiencies for goods going out and also coming into the country. Have you maybe seen that opening up?
We have, first of all, we have opportunity thanks to our many flights what we have with the aircraft offering a sufficient amount or big amount of air freight space on our flights to and from Africa. So it is nothing what you can underestimate. And also what I hear our air freight colleagues from Lufthansa Cargo are very busy to try to sell it and to market this to the market. But definitely we have opportunities also to support here the market with capacities.
That was Lufthansa's newly appointed Senior Director for Sales in Nigeria, Equatorial Guinea, Southern and East Africa, Rene Koinzack.